So again, I can share my screen. Let me know if you guys can see it. Can you guys see this?
Yeah.
Good.
Yeah.
Okay. Can you actually see the
Yes.
Zoom video on the left side, or is it just the presentation?
Come again?
Do you guys see the Zoom presentation on the left side, or just do you see the full screen as a presentation?
We see the full screen.
The full screen.
BFW logo and everything. Yeah.
Very good. So I know. So first of all, Raj, thank you so much for sending this out to your network. I really appreciate it. I think Lori just entered the way it entered. So let me just make sure. Hi, Lori, can you hear us? Can you see us?
Yeah, that should be Purush Sahu. So let's wait till we hear. Hey, Purush, is that you?
Yeah, must be. And mine shows my wife's name from me there. So
Yeah, that's what I figured.
yeah, so it's Prasad, and Lori is Purush.
Okay, very good, very good. Okay, so again, thank you, Raj, for making this happen. Thank you for sending it out to your network. I just want to see, because it's a pretty small group, has anybody not watched the video? Just want to confirm, has anybody not watched the video? Because the way I present it is going to be a little different if you have not watched it.
I have watched it.
Okay. Jagruti, have you watched it?
Yes, I have watched it.
Okay. And I'm not sure from
Purush has to unmute himself.
So I think in this group, we all have watched the video.
Okay, very good, very good. So again, this is a very informal meeting. Raj wanted to give everybody a quick overview of BFW as a whole, and kind of go over any questions. And I'm sure you guys have tons of other questions that are going to come up. Would you guys want to start out with questions, or you want to just give me a quick overview and I can go into some financials quickly and then do the question and answer, or how do you guys want to do this?
So Claire, as I was talking, since most of them have seen the video, I kind of know what this group is looking for.
Mm-hmm.
So I mean, like, for example, how was your first one? How was that journey? Maybe cover that a bit. And then also, most importantly, what's your game plan in terms of return, investor benefit in the sense?
Right.
So that would be another big one on people's minds. And then what is the long-term plan as well? So this is another one.
Okay.
What is the long-term plan? Now the one becoming two, and then what? Right?
Right.
So if you want to, with everybody having a good idea already, maybe take them through something that they have not seen. Your numbers,
gotcha,
valuation, how was your journey? How are you planning to take it from here?
Wonderful. I think we had just had Prashant join. Welcome, Prashant. I hope you can hear us and see us. Okay, so Raj, wonderful questions. And I think, I'm just going to keep it a little bit informal here. Not go to the presentation unless I have to hit on some numbers there. Starting out on the journey. So the journey started in 2018 when I was doing my MBA at Cornell. So at that time, I was looking around for businesses that had potential. And I was researching multiple types of businesses and in all different industries. My background is in oil and gas with it as an engineer. But what I was starting to see over and over again was that when adults were getting together, adults were having really organic foods, organic wines, and while the kids were not having the high quality foods. And really, it was not because it did not exist. It's just the type of foods that the kids want to eat is just not available in high quality ingredients. And that's where we looked into Domino's and McDonald's and all these items that really don't if you really look at the ingredients and the ingredient quality, they're really at the bottom of the barrel. So that's where the idea for Brick and Firewood Pizza came about, which was why not have a place where families can go and get pizza, for example, on a consistent basis, that is organic, high quality, gourmet, but does not have the cost and the price that comes with all of these items that normally would cost an arm and a leg. And associated with that was the question, like, why not, if you look at this from a different perspective, we are lucky enough to be able to afford these items, the organics and the high quality gourmet items. But what about those people who cannot, and why can't they? And normally the answer really comes down to is cost. So we know that there is a break even, or there is a barrier to entry for the general market to come into organics, to come into the gourmet side of whether it's pizza or any other food industry, for example. And my goal and our goal with BFW is really to make organics affordable. And that's one of the main reasons why we went with pizza in the first place, because there's some people that do eat a full pizza, but normally people are sharing pizzas. And because you can actually, divide the cost of that one item by two, you can actually bring down the cost per person of the organics and the gourmet. And so that's our goal. Our goal is to make organics affordable and the gourmet items affordable to all. And go starting out. And I'm gonna go into the journey that happened through this process. So we opened our doors in 2019, and what we very, very soon found out was that the normal systems, the normal supply chains just do not exist for organics. They don't exist for the gourmet items. So you can get items that are non-organic, non-gourmet very, very easily. The systems are in place. You can go to the big Cisco's, the big US foods. But when it comes to organics, you almost had to do it from scratch. So we had, almost every single item, we had to go back and find particular vendors, local vendors, direct from farms. So everything that you see as part of, our dough is 100% organic, our sauces are 100% organic. And all of these things, we had to basically start from scratch with supply chain. We could not take the normal the playbook and use that at BFW. We just could not. And during that process in 2019 and coming into 2020, we at that point had a very good product, and that's when COVID hit. And what happened immediately was our business basically took off. And we went, there was 100% month-on-month growth just from the first month of COVID, and that sustained. After the initial peak in March, it kind of dropped back down, but we still maintained about 60% of that increase. And since then, what we are seeing is that as people get to know us, as people get to know what we are about, we are starting to really gain a lot of support from our customers. Our customers consistently tell us that this is the only place, this is my only option. Like, first of all, I don't order pizza, but when I do order, if I first I tried your pizza here or there, some random place, but once I tried it, I'm like, I can't go anywhere else. This is a consistent thing that we are getting. And from the video, I talk about the positioning. And it was incredible for me. The idea that we had was to position BFW in that space where we were, high quality, takeout and delivery only. And the reason why we went to takeout and delivery only is to keep costs down. So we have pretty much a ghost kitchen. Our overhead costs are 1/3 of a normal restaurant. And those costs, we don't hold those costs. We actually give that to the clients. I mean, and we have done 2 rounds of cost cutting so far in BFW. And today, our median cost of a medium pizza is around the range of $14, and for a large is in the $17 or $18. Now you're looking at pizzas that are 80% organic or 60 to 80% organics. Any other place for those kind of organic percentages, though that is cooked in a very gourmet fashion like we do in wood-fired ovens, etc., would cost in the range of $22 to $25. There's no question about it. So what we have done in this journey is 2 things: getting the amount of organics into our products as high as possible, while at the same time keeping the cost of the products as low as possible, where we can target a larger and larger market. So that's what we have done. And that's what we are seeing as we have come through to the end of last year and the beginning of this year. We are really seeing a huge influx of new orders, new customers, while maintaining our customer base. So that was pretty much, you know, a lot of everything that's happening, you know, where we came from, how we have proceeded in our journey, and what we are seeing today. So today, where we are is, we know we have a great product. We know we are growing at a steady rate here in Sugarland, but it is time for us to go to the real market, and the real market is basically inside the loop of Houston. I'm not sure if all of you are here in Houston, but inside the loop in Houston, and I talk about this in the video. You know, there is one Whole Foods in Sugarland. Inside the loop, we are looking at about 6 or 7 Whole Foods. And our goal is to put it right in the middle of all of those, and to cover that whole market. If we can do that, and if we can get our store there with the product that we have, maintain the quality and the prices that we have, there is no question that we will be incredibly successful once we make that happen. So that's what the story is, and that's where we are going. And the reason why we put out this video is, again, obviously to get, you know, raise about $300,000 to make this second store happen. So that, you know, Raj, I hope I have kind of talked about most of the questions that you had. What did you have any other follow-up questions? Anything you want to go into a little bit more detail?
What did you do for the first store? Or did you raise capital, or what is the financial situation?
So financially, on the first store, we had it was primarily me that financed it, along with one other investor. There was a minority investor that we had, and basically they are still here with us. And so yeah, that's what we did. You know, we were basically internally funded through this process. So you know, 2019 and 20, it was we had to, you know, re-infuse capital to, you know, get us through those 2 years, because of all the, you know, we had to basically learn everything from scratch, and so that was quite tough. But I think we came out of it much more stronger, much more I would say leaner, in the sense that our processes, we reduced waste everywhere we looked. I mean, literally now we have no waste, whether it comes to food waste or unnecessary labor, for example. We are extremely lean, and we plan on maintaining that as we go into our second store.
So you put your own money with a very minor, with one more investor. So what's the percentage of that other investor? So is it like 90-10?
So yeah, exactly right. 90-10 is exactly right. So the first investor was 10%, I was 90%. Exactly right. Exactly.
Okay. So now, next question for me, valuation.
Yes.
So it's at 1.5. So could you walk me through how you came up with the valuation?
Absolutely. So let me just go straight to that slide. Okay, so I'm just going to, let's see if I can. Okay, I hope you can see this.
Yep. We were able to see the 12-month projection at 6% growth rate. That's a slide, yeah.
Yeah, exactly. So what you're seeing today on this slide here is this is December 2020 and coming into March of 2021 here. So this is basically just the Sugarland store. We believe that it's going to take about 3 months. So we want to close this next round of financing by mid-April, and it's going to take about 2.5 months to get the store ready, get you know, basically the construction, permitting, all of that stuff done. And so we believe that the first month of projected sales with this Houston store is going to be sometime in July of this year. So the numbers that we're using here, right here, what you're seeing is about 15,000 to 16,000 a month from the Sugarland store is what you're seeing. Again, these 3 months are projected months, and this is February here with about 16.5, 16.8 per month. For the Houston store, what we are so the difference between the Houston store and the Sugarland store, the Houston store is going to be not a ghost kitchen. It's going to be a regular store with a minimal footprint, but it's going to have a storefront. We're going to allow people to be able to come pick up, deliver online or order online like we're doing in the Sugarland store. We are going to be primary delivery and pickup. So no sit down space, no sit down area. What I would imagine the Houston store looking very much like it's pretty much like a Domino's, except instead of an electric pizza oven, you're going to see two big wood-fired ovens. So that's what the Houston store is going to look like. Again, the Houston store is going to be, so our Sugarland store is only open from 3:30 to 9 p.m. every day. So the numbers that you're seeing, this 16,000 that you're seeing, is basically just the dinner business from the Sugarland store. That's all we are open. We during the daytime, we didn't have much success in Sugarland because obviously people are not ordering for their families during the daytime. In the Houston store, however, we are going to be open all day, and because we are opening all day, we believe that especially being in Houston with the number of businesses ordering and also more walk-in customers, all of those things, we believe that the Houston store in the first month itself should easily hit 15,000. This is twice the openings. The times are going to be basically all day. We believe 15,000 should be very, 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 very doable. Here we are projecting basically a 6% growth rate. And so basically by July or June of 2022, we are projecting a total revenue monthly revenue about 51,000 from both the stores. So that's 15 to 16,000 from the Sugarland store, and about and the rest about 25,000 from the Houston store. So this is our 6% growth rate, and we have done an 8% growth rate too. And the reason I chose a 8% growth rate is what we are seeing today. Today at BFW, at the Sugarland store, which I would say is quite handicapped because of the location, we are seeing an 8% growth rate. So this is more of a realistic or even a pessimistic projection, I would say, for the Houston store, because we believe that it's actually going to be a lot more. And with the 8%, we're looking at something like 63,000 from both stores on a month-to-month basis. So here is your 6% growth projections, and you're looking at a projected P&L here. Your top line obviously is going to be your top line revenue. Your gray is going to be expenses. The orange is going to be gross profit, basically, revenue minus cost of goods sold. Here is your net income and your EBITDA. What you're seeing here is very different from most of the time you have your net income below EBITDA. Here, what we're seeing is we have other income, which is our tips. So your expenses include the tips, but they actually come back in to your P&L later on in the line, and that's why you're seeing your net income actually higher than your EBITDA. With this projection, again, this is the 6%, which is kind of like our pessimistic, very pessimistic projection. We are looking at net incomes of about 12,300, 12,400 by in the 12-month timeline, and so that kind of puts us at about a 1.85 valuation at about 10% discount. Our real debt cost numbers are actually 0.8%, or sorry, 8% is our debt cost, and so our number should be slightly higher or right in that range. So 1.85 at a very pessimistic projection. Going really into what we're seeing today, again, I was telling you 8% is what we are seeing in Sugarland. We expect very much to be much higher than that, but at 8% of what we are seeing today, your projected net income should be around 18,200 by June of 2022, which puts it at 2.73. So these are our numbers that we were looking at. Again, we wanted it to be as pessimistic as possible. going into this, because we wanted to see, first of all, there is a risk involved. I mean, obviously, we talk about valuations, we talk about where businesses grow and how fast they grow, but we are so early stage that there's a risk involved. So we decided to go with the 1.5, even if our worst case scenarios are below our valuation numbers, and that's directly got to do with risk. I mean, there is a risk associated with it. We believe that we are at a place where we can grow incredibly fast, and I believe that if investors like you are putting trust in us, then there is huge amounts of value that you guys can get out of it. Now, going forward, and where do we want to go as far as brick and fiber pizza? What is our goal? Really, our goal is to challenge the status quo. It's immediately, as if the Houston store is successful, if we start to get the projected net incomes or more, immediately the next store is going to be in Austin. So we are going to skip the suburbs like Sugar Land. We are going to go to the main cities, go into the areas that we know that have the biggest demand for our products, and basically do that over and over and over again. So when it comes to what is the end goal, our end goal is to continue to grow and continue to reinvest, and our goal is to be a growth business. So not a dividend business. And there might be investors that are more interested in seeing a month-to-month return on their investment. And for those investors, we do have some other options. But for the investors that are interested in equity, really, there is a huge amounts of value the huge amount of potential in investing with us, because I believe that once we put the second store in, it's going to be pretty hard for anybody to catch us after that.
Hey, Cliff.
Yes.
2 questions. The multiples that you use,
yes.
Can you make it simple enough in the sense, did you take revenue times 5, or what did you use for that 1.5, whatever projection?
Gotcha. So basically here, so this number here, what you're seeing is, so 12,400, right? So 12,400 times 12 divided by 0.08 is our number there. So it's depending on the cost of debt. So it's basically your yearly returns divided by the cost of debt. Okay.
So that's what you did.
Yes. And there's multiple ways to evaluate this. I mean, obviously you have Damodaran out of New York school, and he has an incredible valuation for small businesses, and I kind of agree with him. And with that was a very complicated one, because you have a timeline to full potential, the maximum potential of the market, and the growth rate. So you have to take all 3 of those into consideration. But it's a very complicated valuation, and it will come in the range about 1.8, 1.9. But again, valuations at this early stage is very tough, to say the least.
So now, have you also looked at the market in terms of acquisitions? So are there any recent acquisitions in the space, or how are they projecting in the M&A space? Usually they look at the revenue and then use the multiples, right? So,
right.
Have you looked into that, and what's your comment?
Not so much. I have not looked into that at all, because I mean, really, our goal is not to sell anytime soon. And the companies that are selling this early, you have to question why they're selling so early. I mean, there's sales happening all over, and you really have to question if somebody has an idea and that's working, and they're selling it. For example, I don't know if you remember Zune, ZUNE Pizza was sold for 206, it was SoftBank that bought a $268 million stake in that business, and after a few years it just disappeared. And Zune, surprisingly, is the ones that is providing the round boxes for Pizza Hut. So they went from being a pizza business to being a box business. So you're seeing those numbers, and I think those are I don't know if they're really indicative of reality. You have people like SoftBank who have a lot of money, have nowhere else to put it in, and they just throw in 268 billion, which really, if you look at Zune at that time, it made no sense whatsoever. So it's hard for me. All I can do is, from my side, is to be the investor and see, put myself in basically investor shoes and see where the value is. And that's why, no matter what number I did, I put a even more pessimistic than that to give the value to the investor. Today, I know that at 300,000, 20% valuation, it's actually at a very heavy bargain. Not because of just a general, not because of the general business as we have it, but also our growth. Our growth with this next Houston store and going forward should be quite impressive.
So if you look at, let's say, an investor that is coming in for the second store,
Mhm.
by 2022, let's talk about the $50,000 revenue or $30,000 profit, right? That's really what we are showing,
Right.
right? So then, what about, so let's say if the investor want to get out, what are the options?
Right. Okay.
Are you planning to keep them for the next store? Are you planning to return the money? Any
Okay,
thoughts on that?
So I believe, like, first of all, like I said, looking at from your perspective and as an investor's perspective, I don't want to leave. If I'm taking the risk of going in early stage, I am there for the long run to get the maximum returns. And as far as we are concerned, if you guys help us make this second store happen and stand by us, trust us to do the right thing for you, then you guys are going to be with us for the long run. There's not going to be any buying out, no pushing out. You guys are going to have, these are non-tradable stock. These are Class B non-tradable stocks, because once you go into tradables, then you have to go into SEC and regulations and all that stuff. So these are non-tradable. In case, if you want to get into, you have to sell your stock. That's something that we have not really talked about, but I can follow up on that, Raj. And that's a great question. I can check with the lawyers and see what we can do for investors who now have a need for cash. Let's say, like you said, July next year, somebody has a need for cash and wants to get bought out. I can look into the options there, but currently our system is to be non-tradable for regulatory reasons.
Okay. I would wait for questions from the group. Go ahead, guys.
So, Cliff,
Hi.
hi, this is Purushottam. Yeah, I was pretty impressed with your presentation that Rajiv sent me.
Thank you.
And Rajiv and myself and Jagruti, we are already investors in different entities.
Yep.
And Rajiv convinced me that after eating your pizza, which, by the way, I could not find today. I've been circling all over Sugar Land trying to find you guys.
Yes, we are hard to find. And that's something that we are going to fix with the Houston store.
So anyway, so are you going to be sending out 506B paperwork, or how exactly does one put money?
Right. So we're kind of going through this process. We are in talks with the lawyers to go through our bylaws and take care of all that. So if you guys don't mind, let me get back to you on that. But basically, a minimum investment we are asking is $10,000, and up to whatever number. We have had few people already give us verbals on investments. So once that happens, I'll have to talk to the lawyers on the exact details. But as essentially, you'll be getting stock from BFW. We are a C corporation, so we can issue stock. So that's what it looks like.
Okay.
Also, by the way, Purushottam himself, he's an entrepreneur.
Oh, wonderful.
He started his own company, but that's more of a sophisticated aircraft technology. By the way, he owns a coating company. Your mom knows, and a Tobin guy, right?
Yeah.
So so his company, he started everything from scratch, and they were one of the reputed firms out there in gas turbine parts coating. This is a ceramic coating that you put in, highly sophisticated, highly technological, and he's one of the successful owners. So he knows how hard it is.
Yeah,
Hey,
it's not easy. I can tell you that for sure. That they didn't teach me that in the NBA.
that tip I gave Rajiv worked out pretty well.
Yeah. Yeah, no, absolutely. No, it's been an incredible journey. I mean, very, very interesting and tough and fun at the same time. So it's been great. Any other questions from anybody else? Mr. Prasad? Jagruti?
Yeah, hey, this is Prasad. And, I just got in, I'm about to retire, and I work for ConocoPhillips, but
Okay.
at the end of April, I'm going to retire.
Wonderful.
And just got interested in this. Actually, Purush introduced me to something else and some other investment opportunity where I got into it with him. But on this particular thing that you're talking about, starting a second store and needing to raise about $300,000, are you looking for a certain number of people to invest? And I know you just said that you're going to issue some non-tradable stock, something like that.
That's correct, yeah.
And I think you have said that you will find out from your lawyers, talking to your lawyers,
That's correct.
if somebody wanted to get out a year or two later,
Correct.
what's the process for that?
Correct.
How many people are you looking to fill that 300,000?
Our goal is not to look, we're not looking for a number of people, really. It's to hit that number, and to hit that number.
One person you can make do
Yes.
with that, or
Exactly right. Yeah, right now we have about 50 to 60 confirmed or verbally confirmed, but we just started. This is just from yesterday. So we just had our first presentation yesterday, and we had that confirmed. So yeah, I mean, yeah, definitely one person, 300. Really, we are wide open to all of that. Yes.
Did you say 50 or 60 people have shown interest already?
No, 50 or 60,000 was committed by one person.
Oh, okay.
Now this is again verbally, this is after our first follow-up presentation yesterday. So, but again, as we go through this process, I will, what I can do, Raj, is to get you guys on in the email, and what I can do is we have a potential investor email list, and I'll add you guys onto that if you guys are interested, and I'll update you as we go. And then I'll reach out to you guys one by one just to see what is your interest in BFW going forward.
If you're at least for the people on the call, I can give their name and I can give the email addresses that we have. I don't think I have Prasad Ji's email, but I can give you that. Or they know your email address from the invite and from the
Yes.
video. So either way is fine.
Okay, very good. Yeah, Mr. Prasad, I was in Marathon Oil for a few years myself, drilling and completing. So.
Oh, okay. We're all downsizing at this point. So.
Oh yes, absolutely. Jagruti, did you have any questions?
No, not for now. Just waiting for you to come back with what your lawyers have to say.
Sure.
If somebody has to get out, that's the question that I have.
Sure, no problem. That makes sense. We have about less than a minute left. I can restart the meeting, or if you guys, is there any more questions, or do you guys want me to restart the meeting? What does it look like?
Nothing from my end.
I'm good.
I think
I'm just relying on Rajiv to lead the way.
That's a big responsibility, but I hope we all come out of this successfully. So we are okay, I think, Cliff. So if I need, I will reach out to you for any more, maybe a further follow-up.
Yes.
But thanks for taking time.
Yeah, absolutely. So I will definitely do that. I'll send you a detailed email with everything, and send me the emails, and I'll add you guys to the potential investor group, and I'll be constantly updating as we go through the process.
Yeah, I have one question about your pizza.
Yes, Prami, go ahead.
I've been to Grimaldi.
Yes.
There's one here
Yes.
in Katy. I'm in Katy.
Yes.
How do you compare yours with theirs?
So we in the market right now, we are the highest rated pizza place, and we are not so far away from Grimaldi. So our quality, the base quality is higher. The wood-fired pizzas make a huge difference, and we are focused on delivery and carryout. Obviously, you don't get the sit-down restaurant feel with us, but our goal is to bring that beautiful gourmet sit-down feel to your house. So that's our goal, and I'm very sure we are achieving that currently.
Hey, I have another thought. Maybe you should reach out to some of these folks and then have a pizza delivered.
Yes,
Maybe
do that. Definitely do that. Not at all an issue. Not at all an issue. So yes, I look forward to